Joining me right now is Nicholas Wealth Management President David Nicholas. Also joining the conversation all morning this morning is Fox Business's Dagan McDowell and the King's College in Manhattan Professor of Business and Economics and Fox Business contributor Brian Brenberg. Great to see everybody this morning. Thanks so much for being here. David, kicking it off with you. What do you think is driving markets this morning?
Yeah, well, we're seeing some relief on interest rates this morning, which is great. But the bond market has really been reeling from this idea of inflation expectations going forward. So I think obviously this morning the good news is the vaccine, so markets are heading forward. But we also saw a pretty significant sell-off, significant, roughly 3 or 4% last week. But I don't really have a fear about inflation going forward, how it affects equities. My concern is really for the bond side of the portfolio. If you bring it to a household level, if you're a retiree, someone that's in retirement or approaching retirement, there's a good chance that 40% of your portfolio is sitting in bonds. That's a losing asset class. So I think really bonds could be one of the worst performing asset classes over the next 10 years. But inflation doesn't scare me for equities. It can bode very well for value names like financials and industrials. So my concern is really on the bond side, not the equity side.
All right. Well, equities certainly are poised to rally at the start of trading this morning. Warren Buffett out with his annual letter, a third vaccine in the market as interest rates pull back. How important is this J&J vaccine to investors this morning, given the fact that obviously this is leading to hopes of a broader opening for the broader economy?
Yeah, I think the biggest advantage for the J&J vaccine is really the one-shot dose. I think that, especially for the developing world, I mean, in areas where it's tougher to get vaccine distribution, J&J is really good. So I think that is a very good positive catalyst. There's another name that I like is Novavax that we own that I also think is it's a two-shot variant, but you don't have to, similar to Johnson & Johnson, you don't have to have it frozen at higher temperature levels. So I do think all of this is a positive, right? The idea is COVID behind us? And I think the market is forward-looking. As more and more of these vaccine distributions come to market, that's going to be positive for markets. So I think overall the market is saying to itself, look, forward-looking, this is a very good thing.
Yeah, and that's why I mentioned the Warren Buffett note. He said, never bet against America. Is that how you feel in terms of allocating money to stocks right now, or are valuations excessive after record after record?
Yeah, I couldn't agree more. I mean, the markets have been, generally speaking, right most of the time. And if you look back throughout history, at the times of our darkest moments, our toughest moments, if you look at the times where the market bottomed out, the market bottomed out well before we saw any type of improvement. So I think the markets showed us last year, look, we hit a pretty big low last year, but we're forward looking. So, yeah, I think don't bet against America. We've got an economy that's going to come roaring back, I think, in the third quarter and the fourth quarter of this year. So I think investors need to be poised for that. There's going to be volatility, as there always is, but markets are forward looking. I think 12 months out from now, we will all be very surprised at how well and how resilient this market is.
Yeah. Brian Brenberg, jump in.
David, you said don't bet against America. I'm with you on that one. But sometimes America isn't happy with its policymakers and the things that they're putting forward. We're watching right now as this $1.9 trillion bill rolls through Congress with a lot of pork in it, things that could actually spark inflation. You say you're not concerned about inflation, but I think a lot of people are sitting back and saying, what do you get at the end of the day with all of this spending, all of the regulation that we're seeing coming online? Is that really a recipe for the kind of growth that causes this economy to come roaring back in 2021 and 2022?
Brian, you mentioned the pork. I mean, it's frustrating to see the amount of pork that's in this bill. $350 billion to bail out blue states, $100 billion for education. That's not even going to be spent until really next year, 2022 to 2026. So, yeah, it is frustrating. I mean, the Wall Street Journal said that about $1 trillion of the new stimulus bill has nothing to do with COVID. If you look at the 10 million Americans that are unemployed, that $1 trillion, you could give each of those unemployed Americans $100,000 to 10 million Americans based on those numbers. So the math just stinks. So, yeah, I agree with you. I mean, it is a concern from an inflation standpoint, but still, we're fighting inflation in some ways. Demographics, right? We've got an aging population that helps bring down inflation. So I think we're going to see a short-term bout of inflation, but our U.S. economy is somewhat service-based. It's pretty elastic. I don't think long-term the inflation fears are there, but I agree with you on your point about pork and the ridiculousness of this bill.
So you want to buy stocks here then, David?
Absolutely. I like value. So searching for value, especially, I think the setup right now for financials is really good. We own names like Goldman Sachs. I also like some of the regional names. If you look at a name like Ameris Bank, there's an ETF KRE that tracks all the regional banks. I think if you look at a book value, right, price to book, regional banks are some of the best value that you can get right now. And if interest rates continue to rise, that also will bode well for financials. So I'm very bullish currently on financials.
All right, David, we'll leave it there. Great to see you this morning. Thank you so much.